Tuesday, April 17th, 2018, Monaco 64, home of alternative economics and contrarian views. I want to look at the mining stocks today, and I think they're pointing to a major bottom in gold. Usually mining stocks indicate big money coming into gold, institutional investors, because instead of buying physical gold, they go into the mining gold or mining stocks. There's a lot of rules on funds, on whether financial funds, or mutual funds, whether they can hold actual physical assets. So it's easier for them to go into the stock market and buy these stocks. And I'll show you some charts and why I think that is so. I'll have a look at the dollar index as well. Dollar starting to turn down again. I'd like to say as well that if we do have a major rally in precious metals, it will also be against all other fiat currencies. A lot of people focus, and I don't do as well, on the dollar, but every other fiat currency that we have is a derivative of the dollar. You have to go back to Bretton Woods, 1944, the agreement, all the exchange rates that were set then. Even though now we're in a floating rate system, it's all a derivative of that. Even the euro. The euro is just like an index of the former national currencies, like the Deutsche Mark, the Dutch guilder, the French franc, the Italian lira, and so on, which were a derivative of the dollar. Yeah, and to end the video, I'll have a look at Jesse Livermore, World's Greatest Stock Trader. That's a book by Richard Smitten. Probably many of you have heard of Jesse Livermore. And I'll briefly go over this book. I probably read it a couple of times. It's really interesting, not just because of the markets, but because of his life. And I'll tell you what I take from it, from the book, the most important things for me. So let's see where we are right now. Spot gold this morning is at $13.48 as I speak, up $2.30. The range has been 1343.50 to 1349.60. So gold still holding on there, trying to break out physical gold. Spot silver 1672, up 6 cents or 1/3%, right near the highs this morning. The range has been 1665 to 1675. The Dow is up 155 points. Yeah, it's quite strong, 24,729. That's up 2/3%. S&P is up 0.5% at 2692. And the NASDAQ 100 futures up almost 1%, up 60 points at 6731. Do I think the stock markets are an indicator of strengthening in the economy? No. I think it's more of a reflection of the dollar weakening even further. That's what's goosing up the stock market. I don't think it's a true reflection of value. And would I really want to go all in to the stock market right now, especially seeing that it bottomed around 6,500 in 2009, and now it's all 4 times. It's gone up 400%. No, I wouldn't say that's the, how can I say, a good bet. So, but am I saying you should sell? That's up to you. It's up to people. That the dollar was fairly weak. Here's a quick chart of the dollar index. It looks like it's ready to go and retest that 89 level. And the key level, of course, earlier this year was the low at 88.8. Let's see, 88.25. So dollar index looking fairly weak. So let's look at these mining stocks, the indices. I'll start with the Gold Bugs HUI Index. And I've got a 1-year daily chart here. And the reason why I think things are starting to look up, is that we've broken out of this 180 level. I know 200 was an important level a few months ago and it failed. And I actually think the low we had here, let's see, 20th of March or even beginning of March, that was like a capitulation low for the mining stocks. And right now it looks like we're breaking out. We've been able to break out above 180. Yesterday was a slightly down day, but still holding on fairly well above that 180 level. And it's got a lot of room on the upside compared to gold. So I think mining stocks are going to outperform gold and silver, the physical commodities. Am I saying you should do that? Is this advice? No, this is just what I think. It's up to you to do your homework. And I'll show you an HUI chart longer term. Going back to like the end of 2015 when gold and silver bottomed in December, you can see that HUI also bottomed just a little later in January and then made a really big rally. And you would think with gold where we are right now compared to 2015 that the HUI would be a lot higher than where it is now, but it isn't. So that's why I think there's a lot of upside. I have some. Am I adding to it? No, I'm just sitting there and waiting. I also have cryptocurrencies. I've bought some. I've earned some from sponsored videos. I've kept some of them that I've been given. I've sold. I cashed them into fiat. Some of them, I've exchanged them from some other cryptocurrencies. But I can tell you that the bulk of my holdings is in precious metals. Yeah, I have a good exposure to cryptocurrencies, and that's also speculative, like the mining stocks. And then I have my safety valve, which is the physical gold and silver. How much should you have of that? I'm not here to tell you that. And that's why I'm going to look quickly at this book. I really recommend this. There is another book called The Reminiscences of a Stock Operator. And it even says here, the real life of the reminiscences of a stock operator legend. So this is the biography of, Jesse Livermore. What I take from it is that leverage is the big thing in trading. And by that, I mean debt. Jesse Livermore made millions and lost millions because he leveraged. And that's what traders do. If you gonna buy, if you have $1,000, traders usually take that and leverage it to 10,000, and that's why brokers give you margin, and that's the danger of trading. So leverage, and it seems to be also the danger of our current economy. Look at this article here from Gold Core from yesterday. Global debt bubble hits new all-time high. 1 quadrillion reasons to own gold. So it just goes to it just shows you how global debt has gone up by 42% from a decade earlier. It's at 237 trillion. And then if you add the financial derivatives in the system, it's over a quadrillion. And it's probably more because the derivatives are being underestimated. So yeah, that's what I take from the book. It's you win by leverage, you lose by leverage. And it's just an interesting book. It talks about when he was a boy, Jesse Livermore, how he moved out of the farm in Massachusetts, late 1800s. His dad was a small farmer, tough life, and he went to Boston, I think around he was 14 or 15, and his mom gave him $5, and that's how he started. But the other thing that I get from this, the most important thing, is that you have to be a lone wolf. You have to do your homework yourself. You And like I said, I'm not the one to decide for you. And it's got to be a business as well if you're going to be a trader. You can't do it in your spare time. I do a bit of trading sometimes, but I don't leverage, so I just have holdings of stock, and if the stock moves up, and the way I leverage, I guess, is I have mining stocks because they're quite volatile, and that's a good way to leverage as well. You don't, but if you buy a stock that doesn't move too much, is highly liquid and very popular, it might not make as big moves as more volatile stocks. Cryptocurrencies as well is kind of being leveraged. They're so volatile that yeah, you don't have to leverage, but the moves is almost like you leverage. So that's it for today. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet, and even if you have subscribed, make sure you click on the little bell so you get the notifications of my new videos. You can also follow me on DTube and Steemit.com. I've been there since, well, on Steemit since August 2016, and on DTube since they started it out. I'm not sure when DTube started out, but it's part of Steemit. And you can follow me on Twitter as well. And I'll talk to you later. Take care. Bye.